Good morning and welcome to the Breakfast Club. My name is Darren Hancock and here we are on a Friday morning looking for we hit this key level I had marked out here last night. Now I'm looking for a displacement, significant displacement off of here. We do have a reversal starting here. So if we drop down below that, that's an entry right there. I want to see it come back up into here. But either one of these would be a start of a downward run. A little reversal here, the order block that initiates the run here. Right off the 701. But one candle displaced all the way through them. So usually inside this order block, which is here, you want a premium up here. The ideal entry is like right there. Let's quickly go back through the rest of these. We have now got a new high established on the daily. We have a fair value gap that ended here. It's nice. So what I'd like to see is potentially run up to this rejection block and then no more than 50% of that wick retrace back down and start digging into this, or at least into the bottom of that fair value gap one more time, and come in, find some support off of this. Yeah, we're already back there, so this could just keep running up right now. If we lose 50% of that wick, we're going to obviously keep going higher. So upside rejection block, watch that. 25% of the wick, 50%, so on and so forth. If we get a retracement back below that low, look for a dig into the 25-50% of the BISI here on the daily. If they set the high of the week, pull your fib tool from the low here to the high and look for 20 to 30% off to our TGIF Fridays to come into there. And you'll probably find we're probably sitting pretty close right now anyway. TGIF Friday here. %30 puts us right back onto these order blocks here. Right back onto that old breaker here that initiates this run down. So yeah, 30% puts you there. That'll be 53.09 if we don't go any higher. You want to see it settle in there. So if today we play up into here to 50%, come back down, settle in 20 to 30% range, that would be the TGIF Friday, ending with a retail bull flag. I'm looking for this to go bullish as well. We've got a reversal here. Look for it to run back up into the high of the day, or the daily fair value gap above you here. Look for that to hit. What is this? So look for a refill of this fair value gap here, or a balance of this and this fair value gap here. Overall, we've come back inside. We're banging around inside this BISI. So if we come all the way back up to the fill here, that'll give us a little bit more downward pressure on euro and pound. So look for that to fill the fair value gap below us. So in here, you're looking for a reversal situation to occur, and then it'll run back down into here. We could come all the way back up inside this candle right here before going lower. But I do like the fact that we just hit the top of the daily fair value gap. Look for anywhere between here and here for a reversal. If we don't get it, you're continuing. If you don't have anything that proves that we've got reaching for higher prices or lower prices, then continue going bullish. Found support off of here. This is what you're looking for in the pound, or the euro, I should say. Support here to continue going higher, like that. Continue going higher. If you're pushing for the rejection block above you, again, split the wick into quarters. 25% hold there, get a reversal. It's a sign of weakness. To run back into the range and head back to this daily inversion again. Why is the Dow in here? We did the Dow over there. It's supposed to be CAD, is it not? Yeah, it's supposed to be CAD. The USD CAD. So again, I'm looking for, now that we've got this retracement, I'm not sure. Either we've taken out the high here, we might get a continuation on the downside. But look for more downside, otherwise back into the bodies here and the wick. 50% of that wick. Oh, we've already hit it already. Don't know. Go down to the the lower time frames and see where you get continued support here. So if we break this to the upside, look for further upside. Otherwise, if we get a continuation, just keep trading this on the way down right now until we get a reversal. You're inside that fair value gap, waiting. If you're going higher, keep buying higher until you get a reversal, to get something that confirms change in direction, with preferably a break in market structure as well. Back up inside that daily fair value gap we were looking for. We had marked off yesterday. Now I'd expect to see this hold, that hold, and continue coming down now. You've got this reversal. I expect to see that peel off and start coming back down now. You can come back up and fill the fair value gap. Ideally, you want to see it stay open and then continue back down on the downside. I got into this trade earlier, looking for this upside objective here. Just taking these. Why did it not get? Oh, I'm just looking for this rejection block above me here. I don't want to see it break this low. If it breaks that low, then we're looking for a potential reversal back into the small range here. That's what I got going on there. Gold. Here's the reverse of the current 10 o'clock. Well, that's on the 14th. This is a 1 hour chart. You don't want to know that one right now. This immediate reprice rebalance right here. Break above it, come all the way back inside it here. You have to be aware of your rebalances and whether or not you want to trade off of a rebalance. But otherwise, we're making higher prices now. Glorious little Bitcoin. Look at all the opportunities just marching back and forth. So many opportunities for your plays. Breaks the high, 2, 3. Comes all the way back to it here. All the way through this one, all the way up, come back inside it here. Reversal. Body gets below the low here. Come back up inside the order block and right to the edge of that again. Slam. Let's look at some soybeans and stuff. All right, we have a break-in structure here. And we have a break-in structure there. So we come back up. I'm looking for this area. And then you can, if you're looking at soybeans at all. I don't know how many of you are actually looking at these commodities markets. But I try to give you a bunch of different asset classes here to kind of look at, which are just to show you that there's different assets out there that can still give you the same setups. So we have a reversal. We don't have anything returned to this yet. So this discount array here is important. Watch this one here. So now that we've broken below it, you want to see it come back up inside it to go short back into this range here. If you So whether you're layering in on the short here now, everybody wants to take this higher. So if you're layering in this, your ideal one is here. So if it closes above you, trades back to you, break even, get out. That's the fail-safe idea. Corn, same kind of situation just happened in corn here. We have this reversal here. Body is now traded below it. We're coming back up into it here. And you want to see this low get taken out. So ideally, because we have the 2, I'd want to see the body close below here, come back up inside this order block and candle for short. Back to the gap. First objective would be the gap here, old highs, gap, and then a run back into here. So I'm going to put these boxes on here because I want to see if these actually pan out the same way. So we're looking between these 2 ranges right now. Sugar. What do you got for sugar? Pour a little sugar on me. Good song. Your body's finally closing up. If this closes above here, look for some support on top of this little consolidation to go back higher and back into this balance range in here. So I'll be looking for a run back up into up there. Live cattle. You got a body breaking above here. Let me just show you here. So you have cattle, body breaks above it, tap, 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 you get inside it, you're back to the order block, pay yourself at the order block here. That's the small range you're in, so make sure you pay yourself, pull your fib tool, use your fib tool on the way up. I just want you to see how this still pays using your fib tool. So if this is your block, body trades above it, you trade back into it, you get a full fill no matter which direction, which one you're loading in on. And you're going 50%, pay yourself. 60%, we're looking at this big candle right here, the one that actually came down and filled you a bunch of times. Unless you got in on these, I'm all right with that too. It came down in here, it literally went up to 50%, moved to break even, wherever you are inside here. And then inside that candle, we rode up to 60, moved to 50, 70%, moved to 62. And then it held. Came back to just before short of 62%, came back up, stalled, hit the 70, you're still there. Then it ran to 79, moved to 65 or 75, didn't quite get 88, came back down and then tagged you out right there. And then proceeded to come all the way back down and reload you on again. If you want to take that same trade again, you do the same trade again, 50, 62, 70. It comes back down one more time, loads you on for the 3rd time, 50, 62, 70, 75, and then 70 or 78 here, went back up one more time. You would have closed out right there, right on the last day. So 3 opportunities out of that one area. And that is in live cattle, of all things. Is it algorithmic? Yes, it is, folks. And that's buffering. If you can buffer the snot out of that and have the confidence to trade that, so that was live cattle. We call cocoa way back in here as a down. And so far you still have a old low, return to an old low, consolidation. Here, breakdown, come back up inside the order block, continuation on the downside. So I still see more downside on cocoa. So until you break this high here of this fair value gap to the upside, take market structure, return to the old high here. I'm still short on cocoa. I'm still short. That's my idea about cocoa anyway. Lumber. Lumber. We got one here, one up here. We're inside this range right now. If this holds, you get above here. Look for this objective up here. Discount premium gaps. Wait for an opportunity to see on the lower time frames. Wait for an opportunity to catch yourself a reversal back up into that range. This may be retracing back into this gap here for a while. May leave it open before you finally get an opportunity to run it back up to the upside. These highs are taken. If we start trading through this, coming back into the bottom of the consolidation, my eyes go down here. So we're still bullish though until we break that low. You could be bullish till you break this on right here, the mean threshold or the consequent encroachment. If that's that gap, if you break that on a close, then I'd be more bearish than bullish. But until then, we've hit our objective for the day. There was the reversal. Body traded below it. We traded back up inside it. Short. It's choppy, but it's still short. We have a break in market structure, change in direction, break in market structure, come back up into this order block, continuation on the downside, continue to break structure on the downside, retracement back up into order blocks, find some support. So I'm basically looking for this area here. We're going to close below this, take this low out, significant low, come back, find some support at this, and continue pushing deeper. And we'll wait for the 7:30 opening, see what we get. Let's see if everybody turned up. I haven't checked my screen yet here this morning. Who was first through the door this morning? Let me get this out of the way here for now. Paul Ingram, you're through the door first in the morning here. Does your wife know you are? Does she know you're here? Does she know what you're up to? Jonas, good morning. Tommy, how's my buddy? How you doing, Tommy? This is what I want to see, man. Just more downside now. I'm going to look like a wizard. I was calling this 686 last night. I wanted to see it close above the low. I think I had it at on the 1 hour chart. I wanted to see it close above here, and it did. And then we shot down there, but we still closed above it. We haven't had a candle close below it. And my was aiming back for this order block here. So we've hit it nicely. So far, it's all panning out the way we want it to. And I was just looking for that reversal, and it was right there. I was talking about it right as it was happening, and I still didn't take it. I hope somebody else took it, though. Shepard, good morning. Johnny, morning from Nairobi, Kenya. Oh, excellent. Welcome, 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 Kenya. That's excellent. Yeah, when you guys just say good morning from wherever you're at, just so it gives me a feeling of where you are in the world. So welcome, Kenya. Welcome, Johnny. Excellent. Victor, Russell, Abs, my buddy Abs. How's it going? Hope you're doing well. Hello, hello. Hello, trading en français. Return to here. Look for continuation on the downside. Okay, we got to run. We're going to run below the low. We got a reversal happening right here. We may get another charge for this. I've got, if you looked at the telegram last night, between 686 and 67 something, or 18.7, looking for anywhere inside this order block, all the way back to that little imbalance right there on the hourly. This right here and this thing right here on the hourly is right here. That thing right there. That return all the way back up into the low or back up into here. This 1 minute thing is exactly what I was looking for on the 1 hour chart, looking for this to return back up into that candle's low, all the way up inside it to that candle's high. So you see it break down below, come back up, hit it, and come down. Oh, Erica, good for you. She took the short right off there. Good for you. Way to go, Erica. She got in 5 minutes before the opening. Oh, look at her go. Erica's going to clean up right now. Here's the open. Just slamming it down. Here comes the open. Craig, English guy in Thailand. Hey, Craig, we might have to meet up in September, October. I'm going to be, I don't know if you're still living in Thailand or you're just there for vacation, but I'll be in Thailand this September for the wedding. The wedding, not mine, but the wedding. I set up anyway. Fresco, California, Tommy. Bonjour, bonjour, monsieur. And I apologize for my French. In Canada, we butcher the French language. To hear a good French accent en français, beautiful. You listen to the Canadians butcher it. Eek. Le Québécois. Nice weekend with extra holiday. Hans. Bonjour. I'm off. The Bear Breaker. Greg Taylor. Expat. Expat. Nice. Oh, you're asking if he's an expat, right? So right back to midnight open candle. Good for you, Erica. That's awesome. You're in profit. You're in profit now. Just move your stop loss to in profit and be happy. Just let it ride. See what happens. We have plenty of opportunities. It's Friday. You made money on a Friday. You locked it in. Don't let greed consume you. Just let it run now. Certainly shakes a lot to try to throw people. Down well saved. No, no about that. That's something I've watched. What was the down? This shows serious stay in the market move going on. Rip early sellers, I guess. Needs to fill the gap for sure. Way to go, Erica. Way to go. Morning, Derek. Sitting on the sidelines watching first, closing the gap. Look for a drop down now. I'm looking for this to get down into the hourly now. I'm looking for it to take this rejection block here. Start digging into this. Start going lower now. This is the late in May. We're looking for that run back down now in May, and then the run back up, and then take this stuff out in June. I want to see that high get taken out in June. Oh, so wait, sorry, we're on the daily here. That high has already been taken. So I want to see this retrace back into this month and then run back up and clean that out. Like run up high into the first week of June and then start coming back down. So I'm looking for a retracement back into here. The daily, old high right here at 18,517 all the way down to 18,426. That'd be the ideal place to see this come back into today. Mean threshold of this, or consequent encroachment of this fair value gap. Watch that level. Watch the 25.50, split that into quarters and watch that on the way down. Don't forget, pay yourself at rejection block. We're at the consequent encroachment or mean threshold, sorry, of this order block down here, which is a breaker. Run down, go above that high. Watch this. We've taken all these lows out here, filled this from a premium to a discount. Watch these quick snaps back. That's eating up tons of profit. So if you've got your fail safe in right here, that should have taken you out right there. This is why you have a fail safe. Otherwise, you've got stop losses sitting up here. This is all unrealized profit now. If you weren't looking at this as a potential reversal, always look at these things for when they start taking out lows. Look for this kind of stuff to happen, where you get a body closing above that. Your stop loss sits up here above the high that makes the candles high that makes the fair value gap high. If you get a body close above it, that's when you want to close out before, or hopefully it retraces back so you can get a bit more out of it. But if it doesn't, if it starts to run back up again, you're out. So if this one here sets the high of your fair value gap right there, and you already took out your stop loss. And that's huge loss here of capital. So now you're bullish. Now I'm bullish. I'm not bearish now. So if we get a return back into this area here, wait for the range to establish itself from 930. From the open at 930 to 10 o'clock. We could be running for these old highs back up here again. Are you paying yourself at the lows? Each one of the lows. This is all just, if this comes back against you here, no, this is all about how do you maintain your back end on the way down in a quick rush back down to protect whatever you're making. Or are you willing to just let it come back for a nice high swing inside a range before continuing back down? This is the part that really gets me. If I see these breaks like that, I'm usually out of it. How do you hold on to that and just trust that you're going to keep coming back down? Well, you'd have to break that low here and break this low here for me to get bearish again. Otherwise, I'm bullish again. inside this small range, bullish to back here. Especially if you get above this candle here. We're inside, I guess, this range right here right now. Where are we at? Pull your fib tool from here to here. So we'll come and look for this little area right there. Optimum trade entry, reversal, optimum trade entry. If we need to take this low out here for this to continue down for me. Otherwise, watch right here. Imbalances. You just got some of the gold reversal. Nice. So now we've traded below the low here. So looking for lower price. Run back up into here. So you're really between these two right now. So here's this where your consolidation can be. If you're above here, you're bullish. If you're below here, you're bearish. So inside this range, you come all the way down. See how we're closing? If we close above this in the next 8 seconds, back to the mean threshold. 3, 2, 1. Look at that, just below it. So one says I'm going lower, and this one here says, yeah, so far he's right. We're going lower right off that little piece there. We've come all the way back into that. Stop loss would be here. Continue going back down. If we break above that high, you're going higher again. You want to see this really start getting some legs here now coming down. You want this to continue going south. Get through this mean threshold one more time. There you go. See, that's the parts that catch me on these big runs when you get these reversals below lows, and I go, oh, now we're going up higher. Yeah, you're going up higher inside this range. You did. You hit optimum trade entry, reversal. Then you see the reversal that confirms that optimum trade entry. You trade below it, come back up inside it, continuation on the downside. Rejection block. And this is those retracements that can, for when you trail your stop loss fast, they come back and take you out. And then if there's a huge run from here, this is where you start to second guess your retracement strategy, whether you just move to break even and then just let it run for the rest of the day, especially if you're biased on a downside run, let it run. So now you're still bearish. So Erica, I hope you're still in that. Needs to fill the gap for sure. She's in short. Good for you. And Dave got something off of gold. Is this the reversal you got, Dave, off of gold? Taking out lows. There's the reversal. Either come back to here, go short into that range, or you caught the long, or caught the short from here. That's a tough one too, because you got this one here after taking this low out, and you've got a body traded above it. That's good. You've got a set of rules that holds you. That's good. Coming back up inside the rejection. No, inside the inversion, sorry. Since 9 a.m. open, good for you. She caught the big, she caught the 686 reversal. Nice. And you caught it right at the 686. That's nice. I wanted the 686 reversal. I was talking about it, but I wanted the premium, didn't get it. That's why when you, if you're in these kind of trades, you can look for this body, one candle takes out 1, 2, 3 with one candle, trade the lowest one and layer in. So, you know, a quarter, a third of percent, third and a third for your 1% of your account. And even that a third would have paid you a nice little chunk of change. And right at a good time. Once you opened, there's no news today, right? I don't think there's any news today. $10:15, there's news. FOMC, Waller speaks. It's a medium impact news event. You said in short, and then Darren, we trust. LOL. Well, Erica, I'm glad you trusted it better than I did. Why don't you like price action today there, Amadeus? It's keyed right off of that reversal. Once you get that reversal happening here, it keys off this order block. That was just the perfect opportunity in hourly to do just that. Let's see how we have this break. There's a fair value gap. We have a run back down. Then you want to see it come back into this candle. And that was the entrance right there. That's what Erica got. Beauty. And then kaboom. We're right down into here. So even inside that whole candle, if you pay yourself at the rejection block, if this suddenly starts to turn around now, come back up to this candle's high, and this just becomes a wick, and we finish off closing above the mean threshold of that candle. We just wicked all the way down to the rejection block, froze on that, come back up, look inside that range. If we just bounce around inside here on a Friday, or 10 o'clock revisit this old high, and then my candle goes from there to there. That's the next upside PD rate on the hourly chart. So you just took sell side liquidity there at that rejection block. I think that was the 1 hour where you've taken it. Yep, you've hit it now. So that for me would have been a nice run. Take profit there and then wait for, and if you're leave a piece on for a further downside, you want to see 50% of that wick get taken now. We could get dip into 25% of it, snap off of it, and then start running back up again. So I'm kind of looking for a reversal now into 10 o'clock inside this range. And otherwise, you want to see this 10 o'clock just blast through here. You really want to see this get some legs now, get down into this, through this consequent encroachment again. It came all the way down into the consequent encroachment of this fair value gap. You want to see that really get some legs now, blow through this, 50% of this, aim for that. And if we still get more legs and we're looking for further downside, then woohoo, Erica's on our run. What did you say you're aiming for, Erica? Erica's aiming for what? Let's see where we get. And we're poking over that little that level, just clearing out that liquidity there. We still have more downside though. It is pretty choppy on the way down, so I could appreciate you not liking that, Amadeus. It was a really nice opening for this chop to continue coming down though. Can't sleep over at NASDAQ, yeah. Yeah, I was just wondering what your downside objective is. So it'll be interesting to see how, I'd like to know how people are managing. Are you heading off now, babe? Have a great day, love. Yep. She's so cute. How you're managing the back end. When you get this kind of chop happening in here, are you just kind of moving yourself to break even and just letting it run for the day? And if it pays you, great. If it comes back and takes you out, like is there key levels that you look to continue to provide support at, that you say, okay, now if it breaks this point here, I know I'm wrong, I'm out? Be interested to hear what you guys have to say about that. If you're in the Telegram, I'd love to hear your ideas on how you manage the back end of your trade. From the 3rd of May. What time frame is that you're on, Erica, for the 3rd of May? Until the 5th. Looking good. More liquidity down here. Here's your sell side now. Did I ever get my oil trade? Oil trade panned out or not? Nope, it did not. Must have come back and took me out. Let me have a look where that was. It was long here. It took me out there. Yep. 10 o'clock. There's our range. See if you get some support inside here. $780. Woohoo! We're close to getting another 100 people this week. That's just over a week. We got like 75 people or something like that over a week. That's awesome. Welcome all you new people. Appreciate you popping in. Good morning. David and Dennis. Dennis, where are you from, Dennis? And David Clark. Good morning. Good morning. This is another one of those 10 o'clock. Did it take anything else significantly over here? It did not. Creates more relative equal lows coming back inside that range created from 10 o'clock, 9 o'clock till 10. Equilibrium is right where? There's equilibrium. We just hit off of it now. Oh, no, I don't have that one in there. I think it was one of these ones I was showing there. Erica last night. You click on it and there. So run that high. You'll see it get below here now, which funny enough coincides with the hourly. Look where the regular trading hours gap is. Over here. Look at how much that is that the regular trading hours gap? Or am I on a different one here? Stand by. Well, I think I have to be higher on this 15 minutes or something. So I want to see it get below here. Some support on that. Then you've got, that's what it is, the discount range here. So you want to see, for continuation on the downside, you want to see this break through here on the discount portion. Mean threshold of that candle. Body's not trading below it yet, so we're just coming back into here. I want to see a body get below here. We've closed below this reversal here. And there's the candle that initiates the run. So look for this one to return to here, here, body, and then eventually that high there. So there's the first one. A reaction off of that and straight down will be fine. Good morning, Martin. Sensei. Funny. DC area. Okay, well, welcome. There's no better community than the Breakfast Club. That's where Derek is right now, having breakfast. I don't even have a coffee this morning. I'm getting the Twitters, the shakes. Silver bullet time. Silver bullet time. That's all you need right there. There's your silver bullet, Derek, right at 10:08, 10:10, inside that for short. You've revisited this one a couple of times inside that silver bullet moment for continuation on the downside. Want a premium out of this. Yes, that's all it needs, just to pop up 50%. But there's a fair value gap in here. There's this in here. I want to see it come back and to revisit that. Give me a nice optimum trade entry for a short here. The streaming isn't delayed today. Ooh, maybe it's when we get to like 780 people, they start giving me faster speed. Yeah, it's delayed. I'm looking over at my one there. It looks delayed. Fernando, happy Friday. Yes, indeed. It isn't too delayed today. I'm going to take a walk. No trades this week for me. Smart. It's knowing when you should stay out of the market. Amadeus, good for you, buddy. Thank you very much, sir, for all your insights. You're very welcome. And I love the fact that you're taking the courage to walk away from the charts when they're not sitting the way you want. That's great. Walk away, man. That's the best thing to do. That's a disciplined trader right there. Good for you, man. I'm out of sync this morning. Gonna have to go get in tune here shortly or stay out. I have to go grow shop early today. Yeah, it looks kind of I can argue both directions right now, so I really have to kind of stay. We are bearish overall right now. We'd have to take out this inversion, this gap above us. We'd have to get above that gap to go higher. Otherwise, back inside it for a short. Just waiting for something cleaner, I guess. There's 62%. 2% right on. It's just a tad bit low. It's like right as close to that little fair value gap or that regular trading hours gap we outlined there. And you're back inside this range again. You want to stay above this. We got fair value gaps all over the place, premium and discount arrays like crazy here. So not clean, is it? Let's look over here. Give us something that we're ugh, that's nothing either. Yeah, I can see that's what's going on there, but it's not super happy with that. What are we at here? We're sitting around doing a whole lot of nothing right now, and not a lot of certainty going on here. So far, New Zealand dollar's nice, reacting inside that range, right back up to the top. Australian dollar. Nice return back to old highs. So if you're looking for an old high, look for right here. We're going to go down to the 1 minute chart here and see if we can find a reversal, because I want you guys to see these things. When you're looking for these key levels like this, right here, so you're looking for a reversal to happen that supports right there. So in here, we're looking for a reversal that supports a run up higher. There's one right here. We come down into it right there, continue going higher. Stop loss would go right here. It would come all the way down, taking you out if you didn't pay yourself on the way up. Let's say you're just looking for that as your entry to go long. It came down. You wait for it to break it at the new high again. You get confirmation. It took your, if it didn't run, take your stop out. Look at the spread here. What do we got? What's the low here? 488. It's the low here. 488. 488. So even, your stop loss is just below that. Whatever the spread is would have taken you out. So you have to count for the spread, I suppose. Your reversals here. Body closes above it here. Closes above the next one. Comes back, literally lands on it to continue higher. So from that point on, you have your key levels. So that's what you're kind of looking for, these key levels. That's why it's important to, one more you understand this 1 minute one, and you see this kind of stuff saying, I want to see it come back right to there. Just take out that low, and I'm looking for a reversal to happen, which is what we were doing here on the 1 hour chart for the NASDAQ here. broke the low, came back into it. Erica was bold enough to grab it right at that point. And consequently, you're in even though it's choppy, you're still in some good profit now. Now we have broken this to the upside. Though we haven't taken that low out, we have broken it to the upside here and here. Close to the upside. So you want to see it come back, find some support of this, and start pushing higher now. Good for you, Jonas. I like hearing people say, no, I don't have anything solid. This is when you get to read price action, though. Like, don't lose the opportunity right now to really study price action in this kind of mess and say, am I on the horse? Can I stay on side with the horse? Where does it fail? Very important to say that question, I think. Where does it fail for me? And it goes in the opposite direction. Watch the candle. And if it fails there and continues going, then you go, yes, that was the fail point for me. If it's not, then, and it continues on, then that's great. If it's not the fail point, or you suspect something is the fail point and it just blows right through it, and you go, okay, well, it didn't fail there. It just kept going. Go back and analyze the price action and see where you went wrong there. It's not randomness in the price just because you couldn't read it. So we'd have to see this break below this low here on the downside to start getting short off that. We start taking this equilibrium out, then I'm looking at this piece here, right here. So we knew it were going long right there, came back into the midpoint, which is allowed to do. It's allowed to come back all the way inside here. Ideally, you'd want to see it just come back to rebalance that wick right there. And then start pushing higher. We're pushing higher. Look for these old highs here. If you take these old highs, what have we got left in here? You've got this inversion sitting over here. Draw that one out. Are we going to eat through that one? You want to get on top of that, find some footing, get through the mean threshold, rejection block, old highs. Just watch those PD arrays and just keep monitoring the PD arrays as they go up. And watch them and say, and look for that PD array and say, does that give me a level of support? When I see it touch that candle, its wick, what kind of reaction do I get off of that? Does it tap it and then instantly pop off and you go, yeah, it's a sensitive area. It's like a prickly needle. You just poked your finger on it. You get a reaction off of it, right? This fair value gap sitting right here. How are we acting inside that? Are we just blowing right through it? So watch, see how that little spot right there, watch to see how that reacts off that. Here was the top of the fair value gap right there. Reacts off the top of it. I'm going to pop them back down. Draw your box out here. And ask yourself, where am I inside this bigger range? This range here. I'm in the premium portion right now. And overall range, I'm above the equilibrium now. Now we know we can just pop into the equilibrium and start coming back down again. So now that we've taken out this high, I'm looking for this. If we break that on the low, come back inside it, then I'm looking for a short inside a smaller range. So the 10 o'clock silver bullet is slowly, if your stop loss was sitting up here, got taken out. If you didn't pay yourself at the rejection block, literally at the rejection block, you would not have, you would have got taken out, and that silver bullet would not have come to fruition. I tell you, you pay yourself at rejection blocks, you don't always get the the low when you get the rejection block. If you hit the rejection block, you're 100%. If you don't, if you get that, this is not always 100%. Just because you hit that doesn't mean say you're going to take that. So we had a continuation to the upside. We're still following upside, looking for this one to take out that, looking for a close, 10 seconds. It is. We're above that. We're still going higher. Danisk is in the trading group. Oh, he's a mentor as well. Well, Danisk, welcome. How did you hear about us? Did you talk to him about us, Dave? He brought Eric in here. It's one of my mentors. Well, it's great. Let's get his feedback. I always like to get other mentors in here, man. You're in good company, Dennis. Yeah. Michael's popped in here 3 times in this since I've had this show. He's popped in 3 times already. Dave Clark, since ICT teaches that Thursday normally makes a higher the low of the week. And we hit all-time high yesterday. I'm expecting bearishness back to the high. Probability of opening of the monthly bullish order block. Oof, okay. That's some big those are some big points you're reaching for there. You'll see that all the time I stay in this 1 minute chart, I will change minds. I will go bullish, bearish. And whatever your upside objective is, reach for your upside objective based on higher time frame, but get in on your lower time frame. And I'm just going to show you how to read price action here. That's all. So we have this this fair value gap here taken out on a close. We come back into it right there into a wick, going longer. Where does this fail for you now? Where does it reverse for you? Ask yourself that question right now. Where, if I was long on this, where would what's my upside objective? I'm looking inside this whole range now. Where's my upside objective? And where is the fail point if that objective does not get reached? Like what point along here you'll say, okay, if it closes below XYZ, then I'm wrong. So here's your 30-31 candle. We're going into that crazy Ivan time now. That's not an ICT term there, Dennis. It's not an ICT term. It's at the bottom of the hour, 32, 36, 38. Those times we're looking for a little reversal to happen and then a continuation, or a reversal to happen inside of a fair value gap. Here's a rebalance right here. See how we went up, instantly rebalanced it, and then went back up again. So you can discount this as, you could treat this like a fair value gap. And we've now taken that high. So some things to watch out for. I take your box here, and my mouth tends to run ahead of me a lot of times. So you watch this. We trade below it, come back into it. We're looking at potentially bearishness inside this little range here. If we continue to trade off of it and above it, look for these old highs. I'm still looking inside this range for the premium here. We didn't get a decent reversal here, and this did not take out that low. So I'd like to see these take these lows out before you see these ones to get long on them. So if you've been watching price action, it's not super sharp, not super clean, but you can still see the reactions off these inversion fair value gaps. Still finding support. So here's my upside. If we continue to blow through that and you're looking for further upside inside that order block, where was the other one? I think I put it up here already. No. I did not. So the next upside one will be, oh yeah, right here. Just moving in there. That's the hourly upside objective. Next. Obviously, liquidity sitting right above this high here. Erica, I hope you've paid yourself along the way. I hope you've paid yourself along the way. Yeah, Thursday doesn't usually set the higher or the low of the day or of the week. It can. It certainly can. Friday can set a higher of the week. But usually the low is set for Tuesday or Wednesday. You'll see the high. And Tuesday's usually the time, 70% of the time, you'll see a higher or low created in Tuesday. But Tuesday, Wednesday's usually high. Thursday's usually a reversal day. So you usually get a reversal in Thursday. And Friday, you get we're looking for a TGF Friday. Off to work, family. Take it easy, Tommy. Take it easy, buddy. Be safe out there. Darren, I stopped by your stream earlier on 4 or 5 months ago when you first were starting up. Enjoyed the positive vibes. Well, that's awesome. Thanks, Dennis. It's always nice to see another mentor out there, and I totally respect if you're doing this stuff live, man, I totally respect what you have to go through to do this. You really put it on the line here, and I'm on a 1 minute chart, so I'll put it on the line and you can see if I'm full of shit real quick. 10 minutes, if I'm not calling minute by minute candles and where it's going, you'll know right away whether I'm right or wrong. So I admire you, Dennis, for being a mentor for people, putting yourself out there, man. It's much respect. And I appreciate you popping by for sure. Thank you. And it sounds like you got Dave. Dave is super keen, man. I love that guy. He was hitting charts, man. He's questioning, throwing charts up there. Is this what you see? Is this what I see? Is this what I'm looking for? And he is getting to be a solid trader. So you've done some good work with him, obviously. Cynthia Angus, Tuesday normally sets the high, sets the opposite of Thursday. Generally, if Tuesday makes the low of the week, Thursday will make the high of the week, and vice versa. We just had immediate rebalance take place on the 1 hour chart. If we resume bearishness, oh boy. We're still bullish. All the time I'm looking at this, we're still bullish right now. Always keep in mind, every time you take out a new high, look for this right here. I'm starting to look right. Always keep chasing these fair value gaps up. And when you close below them, look for a level, look for a potential for a reversal. If you trade above them again on a close, then you're going higher. Look at the range, and always also look for the first swing point, the last swing point, and look at the range you're in. It's a small little range, and I keep chasing these ranges over and over and over again. You'll see there's 50%. So yeah, we traded below it. See, you came back up inside it. We did not break that high, so now you're going short. Optimum trade entry, order block. Now you want to see this continue driving all the way through here now. So now I'm bearish. All the time we're below here, I'm bearish inside our longer range. That's a hell of a retracement all the way back up inside here. Now you look at this range here. Pull the fib tool from here all the way up to here. 62% puts you right on this little imbalance right here. I want to see that create a fair value gap there. We've just taken out this little swing here, little tiny guy. If that stays open, then that becomes an area of interest to me, which it didn't. So we come back to find support at this, continue going lower. If you climb above that, then we're going back higher. So just watch these now because we're in a premium range. So come back, get some support, continue pushing lower. And if you climb above it on a close, then look for higher prices. Look for old highs, look for order blocks, rejection blocks, or not rejection blocks, but they're breakers. You're going to come back in, find support in, and then continue higher. I do like this premium array up here, like array. We don't really have a like array down here though. Remember, I like to go from like to like. There's nothing that's similar in here to up here. And yeah, you could look at this, but I look on this range and I look for something in here. If I would have had a rejection off of this and we would have stayed above that, then I would say, yeah, I'm aiming for up there. So if this is the next price leg, you want to see this mean threshold get taken, close above, take that threshold, and then start running the highs and look for here. So I want to see this get back up on top of here to go higher. Keep your eye on the mean threshold as well. This is an immediate rebalance as well. So look at that as a fair value gap as well. If we get above this on a close, then you've got that little swing taken, that rebalance, get above it, find support, continue pushing higher. That'll also confirm this one if we close above this as well. So it rebalances right back into the mean threshold of this candle. Boom. So you want to see it provide support here, right at that little dot where it hit there, right on a 40, strangely enough, hey? So still bearish all the time. We're below inside this guy here, and we have not traded above this here. They're two overlapping. This one goes shorter, this one for higher. Who wins the battle? You're inside this smaller range now. Who's going to win? We're going to go shorter, or we're going to get on top of this and go higher. Now, overall, you might have a higher time frame objective you're aiming for, like liquidity sitting up here. You're saying, yeah, it's definitely going up there. Well, it's not definitely going up there. I don't know it's definitely going up there at all. Unless you're trading off of a 5 minute. Let's look at a 5 minute. Do we have a setup on a 5 minute? Other than this one here, where we had the reversal right there. We come back inside it nicely for this run up into a our upside objective at 686 that we were calling for yesterday. I don't see any major reversals going on in here, so other than this guy here, which is really high in the premium range. So look for some support off of that, which you do. Are you going to push hard? I got nothing in this 5-minute jobby here. You have this order block here. You have the breaker right here. 5-minute breaker right above you for a higher push. Right inside mean threshold of that breaker gives us that little 1-minute fair value gap that we're looking for up there. So I would like to see this push higher based on the 5-minute breaker and this premium array inside this range here. So watch to see this climb up on top of here. So when you're trending in this kind of direction and you see this first reversal and you jump on that first reversal and you go, I'm going short. Look for the nearest swing point and you got to pay yourself at the rejection block. Pull your fib tool. Is it 50%? Did you get in on your 50%? 62%, blah, blah, blah. Use that fib tool on the way down. If you did inside that range, whether or not that was worth it for you to trade 5 handles, I don't know. That's your trading style, I suppose. See how now we're just opening up right on it and we're going higher. So mean threshold, we want to see that giveaway now. We've hit it once. I want to see it get hit right there. See the reaction off of it? Even if it's just a little tap, I love seeing that stuff. That just says it's an area sensitivity for a second. On a 1 second chart, we've just hit a premium there. We've come all the way back down and we're bouncing around off that premium array. And we came all the way down in a 1-minute chart and we finished off below 50%, opened up. So we came all the way down to a discount and then went back up again, all inside that 1-minute chart. So watch as each one of these little candles starts to form. So now we're bullish. So we want this to continue going higher now, up that objective. And because you're in this only one array that supports this small little range you're in, you can go bullish, bearish, all inside this thing until you get a distinctive break above that mean threshold there. Now we're starting to really dig into it, which is good. We cleaned out the little highs. The only candle you got below you right now is this guy right here. We have a little swing. Rejection block above you. You want to start, it wants to extend this range now, going higher. I like to see this get taken out because now I'll start doing all this kind of stuff. And this is not always 100% either. Take this and I go, is that an objective I could be reaching for if this is the next price leg up, or if this is the next price leg up from here? I will just take this high out here. I'll just put this over here just as a curiosity piece. So all the time we're bullish, I've got upside objectives I want to aim for. So until we take this out now on the downside, or we get a new fair value gap forming as we get clear these old highs up here, these little equal highs, there's a pool of liquidity sitting here, and I'll see that fair value gap above us. Paid and closed. Good. Glad you get some money out of that, Erica. Yeah, it didn't look good when it started getting through this equilibrium of that whole range. and you started breaking this to the upside, you already retraced back into a optimum trade entry here to go lower, and it did not push lower, right? And then we get another little silver bullet, 10:17 for the 12 o'clock lunch hour run. Oh no, sorry, the 10 o'clock silver bullet. See, this is that thing I was telling you guys about. If you see an hourly wick and you see that first silver bullet right here, there's the 10 o'clock right here. Then you look for this and you go, oh, here's a silver bullet. I'm going long. It takes you out. You go, oh, okay, crap. I'm going to take this silver bullet here and I'm going to go short. And all of a sudden it goes, boom, it goes against you. And you go, crap. You got this one here and this one here. Wait for the 10:10 to 10:12, 10:16. So that's why I've got these little dots in here. 16, 17, 18. Look for a reversal. And this now becomes, and we have a new macro forming here in the next minute. The next macro begins. So wait for that wick part of the hourly candle. If this is the hourly candle, this is the wick that's forming. And you get into the out of the bottom of the wick and you start getting into the meat of it. And it usually occurs in about the first 10 minutes or so. And then the 16, 17. So that's why I'm not super reliable on the very first one unless you see a clean silver bullet entry at 10 o'clock. Otherwise I wait, because that's usually the wick that's forming in the hour. And you can get these wicks forming. And then after about 10:10, you either got continuation from that point on because the wick's already formed in that hour. And then the body, you get the body part in the last, you get 20 minutes of that. And then look for the last 10 minutes, 10 to 15 minutes or so of the wick. So here's the 10:50 macro beginning now. There's a lot of liquidity sitting up here now. At 10:17. Yeah, I missed it too. I was too busy looking at this one. I was ignoring my dots. See the crazy Ivan? Look back to 38 and then kept going. Crazy Ivan. Now we're sitting at 50. So I'd like to see this get taken out on the downside. Trade back into this because we did take that high out there. I don't have a significant reversal going on here. As if we stretch it out a little bit, we see something in here. So you're bearish right now below here. If we close below that, and then the confirmation for me is here. I'd like to see that low get taken out there on that breaker. It breaks that high. If we still get a body staying above here, I'm really between here in a discount array and this guy in a premium array. I think that's a discount. It's probably not. Probably both still premiums. Yeah, they're both still premiums. This one here and this one here inside that bigger range. We don't have a discount array down here other than this breaker. This big 3-minute breaker. So watch this level here. We trade below it. Yeah. So I want to see this one here get taken out now. So if you hadn't already noticed, we're bearish off this inversion here. Confirm bearish off this one here. Now I want to see this, take this one out here. Keep your eye right here. Wait and see where this closes now, because then we're back into bullish if we get above here. Inside this range again. Bullish again. Watch this here. If we get above it now, look for the imbalance right here. And then the reject or the mean threshold here. Back to this one. Look for the mean or the open and then the mean threshold. Find support off of this one again. You're really going to be stuck between this candle and that candle right now. Those two inside that smaller range. And you're in the premium. All I've got here, there's no order blocks, or sorry, there's no fair value gaps other than this one back in here to get some support off of. And inside that range, we're still looking at 50% here. Dipping it is in the discount. So find support off of this. Order block, mean threshold. Watch where it supports here. Does it find us some support and we come back up into here? Between here and here. If this gives way, you're looking for that dude. Okay, get rid of that. So now we're just playing with order blocks. We have no inversions or something to have fun that we typically key off of. That level there. No bodies closed above it. We have a body closing below this one in the discount range. We've eaten all through this mean threshold. This is the candle I want to see close below. If not, we're back into consolidation again. Now you wait and see. So you see this low has been taken. If this turns into a fair value gap again now, you want to take this guy here and move him into here. If you break him to the upside, look for upside. I've got nothing, no really sexy return. Like you want a nice clean pop, sharp run down and a sharp run back up again. That's what you want to see. You don't want to see this big blobby mess here. I want to see 4 more minutes. I want to see the big run up here now. Clean that out, and then a retracement back into the range. 50% of that range. 50 to 62% of that range. I want to see that high get taken out though. We're not getting a body below here. Just run on liquidity. Killed your short idea. That's good. Now you recognize, David, where you see that fail point for you. You see it failed right there, and that's when I know if it breaks that point, my trade is not going to work. If I'm in a trade, I'm out. and stick to that rule. And then just look for constant ways to reinforce that rule of where does it fail for me? Because a lot of us just keep looking for something and just go, oh, I think it's trading against me. Oh, it's coming down. It's coming down. Oh, no, I think it's going to take me out. Well, why do you think it's going to take you out? Well, because it's traded below this inversion. It's come back up, found support at it. So we're bearish right now because we're finding support off of this inversion. It's the only thing I've got. And this mean threshold has been eaten through. Like, it's gone. That order block's gone. So I'm looking for it to close below here on a body. And then I'm looking for that candle to provide a level of support. Now it's huge from wick to wick. It's quite huge. And where are we sitting at? What now? We're 58. So 58 is instead of low. Then we get 00 and 2. So look for 00 and 2. May take this low here. You got this little imbalance down here, and we have this regular trading hours, was that? Or no, it was this one here. This was the regular trading hour. Still no body below here yet. Continuously wicking. Now you're still not finding any decent reversals, so you just sit and wait. Just read the price right now and say, can you stay on the horse? Can you stay on the horse, or is it going to shake you off? And does it end up going in a direction that you're expecting it to go, and did it turn and run in the opposite direction? And when it turned and ran off on you and shook you off, where did it shake you off? Find the spot it shook you off, study it, journal it, draw pictures around it, screen capture it, make a ton of notes. I love that. Do. So still bearish, change in direction, found support, continue down off this inversion. So we're still bearish, looking for, you're already through the consequent encroachment of the wick. So looking for this low here, order block, equilibrium of that whole range again. There's the fair value gap here. There's that little imbalance right there. So see a fair value gap form here. Then you start going, okay, now I've got some swings. I've taken out some low here. Now if I can get above that, then I can get bullish again, and I've got a premium range to start reaching for, something in the premium. But it looks like it's filling on us. So if it comes back and rebalances, continue on the downside. Look for this order blocks body, mean threshold, which is close to equilibrium. So I have a body that closed below it right here. And then what do? We traded right back up to it right there. Bing. And I was calling that up here. I said I want to see it close below, a body below here. It did. Came back up, hit it beautifully right there. Look at that, like right on the money. And then we get continuation on the downside. That's what you want to look for. So you start to look for, this is what I want to see the PD array do. And if it doesn't, then I'm looking for, it fails for me if it would close above there. It didn't. It broke it, hit it. And look at this drive down now. We're through the equilibrium. We got a little reaction off of it. And then a bigger, deeper dive down into premium this is really a crappy premium, but premium here to discount. Where's the discount one? The reversal inside here now. And we just hit it there. There isn't one down here, so this is the one you look for. Get rid of this one here. I wonder how long this damn thing is. It's from way back there. Okay, forget it. You get the right idea. That's the one you're looking for right there. So premium to discount inside that range. If you can get back into this further one down here, you still got a little piece left down here. This one here we can get rid of now. Back to the mean or consequent encroachment, back into this little guy right here. So we're inside that premium discount range. We didn't quite get what I was looking for up here. So that's why I say whenever you see, if that's your objective, always look for the potential for the reversal. And when you see the reversal happen, you're not going to get your objective in the short term. You may get it again if we see another reversal to push higher. But if you don't, then you're constantly looking for hold highs taken. That becomes an area of curiosity for you. And if you finally do get the break, like if you ran through it here, I would wait for that to clear that on the downside first before you think about getting in on that again. It cleared it on the downside, came back to it one more time for a short, or you want to get rid of that order block. We finally did on a close, body, come back, hit it. So you had two opportunities to watch this point right here. And we talked about them as they were happening. And then, so then you look for a like array. What is a like array inside that big range that you're in? Well, this is the discount array that gives us the reversal. So from reversal to reversal, if you just traded that alone, or if you just took the higher range, here's how you can kind of stay out of all the mess on the whole range. There. If you caught this here, you would have your stop loss sitting up there. You wait till you hit 50% right there, move it to break even. As soon as it hits 62% right there, you move to 50. Here, it goes to 70, you move to 62. It runs to 75, you move to 70. It would have ran all the way through here, 78. You would have moved to 70. And as soon as it goes beyond the 78, you're just chasing it down now. If it comes back and takes you out, you've just caught the optimum trade entry reversal for this big run back up into here now. And you're literally chasing that down from that spot right there. Now it's easy to hindsight it, but I was calling it as it was happening, areas to look for, things that we wanted to see. See that nice little rebalance of this fair value gap down here? I think that may even be a tad bit short of it still. But it ran that low. I don't have, see how it just comes back. It just always balances. There's no decent fair value gap on the other side. You want to get a decent swing going on here. What's going on your 5-minute chart? Do you see anything on the 5-minute chart that supports price? I can get rid of this now. So in your 5-minute chart, you can put your little box in here and look at that as an area of curiosity. If this becomes a fair value gap, we haven't really taken out a significant low though. I'll remove all these things. So watch this area right here. We're rebalancing this. As long as we don't get a body trading above that, or body trading through here, there's a little tiny imbalance right there, price imbalance. And yes, they are important. Crappy range to be in 5 minutes as well. 15 minutes, what does that got you? A rebalance right here. See that 15-minute immediate rebalance? Remember when Mike was saying you have a wick on one side and a wick on the other side, and it rebalances? Treat it like a fair value gap. Body trades all the way down here. It comes all the way back up into the premium right there. Now, like array to like array down in here. Slam all the way through into it. Not clean by any stretch, but it's here's a reversal, 15-minute. Body breaks above, come back inside it here. Running for liquidity up, rejection, old highs. This in big fair value gap here. That's all reprice, rebalance right there. That's a big fair value gap. Come back up right to the top of it. You fill it. Bing. So if that was your entrance and you're looking for an exit up there, you got a perfect exit on a 15-minute chart. Now I'm looking for this to continue going higher off of here. Let's see if this provides a level of support. Not clear enough for me at this time. I have to head out. Chat with you again later. Busy weekend. Enjoy all. Thanks, Darren. No worries, Derek. Hope you have a good day, buddy. Christoph, hi. All mentors, based on your tape reading, how do you see the next Monday? FTSE Dow still bullish? On the daily, I will give you my idea about a daily chart. We've returned back into here. So Monday, I would like to see on Monday this order block holding price. We've already eaten through it. But old highs, we're in a consolidation, price leg down. Oh yeah, stand by. I think we might have a nice little cam model for you guys here. Oops, let me go back. Cam model. If we close below here, I'm going lower. If we tag this on Monday or Tuesday's low and push for higher prices, or Monday come in and just clip this and then start pushing for higher and make a Tuesday, Wednesday high back into this this candle here, order block. I'd like to see it come back up into here, old high, mean threshold. So there's like multiple levels, 1, 2, 3. And downside, I'd like to see if it closes below here, I'm going lower. Look for that, an area of sensitivity here. See if we get an area of sensitivity off of this. And if we close higher, look for 2 more levels, 1 here and 1 here. So I'm looking, these are the levels I'm looking for. A high, the bodies, or the rejection block high. If we eat like we have already, we've already eaten through that. If we continue to close again today below there, this is my line in the sand. That's your last and final entry for a long. So I'd be looking for a long in here. If I didn't get a long here and I started seeing it close below there on the hourly, I would or on the, you have to go on the daily, you can't go on the hourly. If it closes below there on the hourly, sorry, daily, through the mean threshold of this candle, obviously, then you've got more downside. Otherwise, 1, 2, 3 on the downside. And then upside, I'm looking for 1, 2, 3, 4, 5 key levels. And in those, I'm looking for the reversal. And then the upside objective would be whatever I'm looking for up here would be that my first upside objective. And you stay in that until proven otherwise. Now, you may enter in on a 1 minute, and you can see how so many times you're going to keep getting bumped off with these little reversals that happen, and the little reversal that happens. You're going to be prepared for those and say, I don't care. My upside objective is I'm bullish. My bias is bullish for the day. Set that thing, walk away from it, or move to a higher time frame and manage it from a higher time frame. Sorry, it's supposed to be here. You can manage this. So enter in on a 1 minute chart, then go to your 15-minute chart and look for a maintenance of that. So here's your entrance right here. Perfect. You're looking for a higher objective for the day. Stop loss sits down here. And the moment you take that high out, move yourself to break even, pay yourself a piece. If it comes back and takes you out, wait for it to take that high again and revisit this hold high here. So once it comes down and takes you out, revisits it right there. Stop loss will go down here again. If it takes out that high one more time, just keep paying it to the whatever method you use for managing your trade. And you get beat up quite a few times, or you'd be paying yourself at rejection blocks. Every single time it comes up to a new rejection block, you pay yourself, and you could be buffering the snot out of yourself inside this trade. This would be a really nice buffer. Come back one more time into it here to go long. Pay yourself at the rejection block if you hit it again here today in the next 15 minutes or so. If that runs up there and hits that, pay yourself. Or right here, I should say, here, then here. And look for higher prices. I know that was kind of a long-winded answer to your question. I'm sorry. David, it's consolidating around that 15-minute fair value gap. Yeah. That was 841 breaker holding up pretty good. The 841 breaker. Yeah. Yep. Agreed. Very much so. So if you ran up to your CAM model here, this whole consolidation with the leg that takes out the high, here's what you look for. If you get this 9 o'clock run up into here, look for the swing projection down now. I'm so curious about what the swing projection is here. There's 4 all the way down to here. if you take it right from the bottom of the fair value gap to the top, projection brings you right there before making the reversal. Nice. Oops. So see how we're finding some sensitivity inside this? You ran all the way through it. Watch right here, draw it across. It's the bottom of this one here as well. Find some support off of it. So bullish again until we get below this spot here. How long will the discount and top step last? No idea how long the discount will last. I still, top step's kind of annoying me right now. It hasn't given me, it hasn't helped me out at all. I'm still waiting for those guys to send me a confirmation email saying, still got nothing. It's been 3 days. They're taking my money, but I still can't get into that damn account. I'm being hung up on that CME contract. It's not recognizing my postal code for some stupid reason. It refuses. It says your postal code's wrong. I'm like, bullshit, it's not. It's right, but it won't accept my postal code. And I vaguely remember having that problem with them before. I can't remember how well we fixed the problem. But anyway, I can see my account behind the CME contract. I see the contract in the background kind of grayed out. And I'm like, and it says, you know, you're here, but I can't read anything that says I can come into here and start loading it up. So that contracts, you agree to the contract and you pay for it, or you put your password and everything. And they haven't given me a password, and they haven't given me the CME thing. So I'm stuck with Top Step, but at least my Apex trade is working. And Apex, I got onto them, wrote them a bunch of letters about what was going on, and they were like, you got to do this and this. In the end, I figured it out, and it was nothing about the answers they were giving me. They were totally giving me a runaround, and it was not the thing that fixed it. You had to actually go into ThetaWaveTrader, and then you had to go up into a little box up here and say add trading view. And they were giving me some other bullshit runaround. It was absolutely not what they said. You haven't finished filling in your contract. I'm like, bullshit. I'm all signed up, ready to go. And then they were talking about you have to apply for data and then turn it off. I thought, I've already got data. I'm paying for it in here. But anyway, it was, you go up to the top. There's a little box up in here somewhere that says Apex or whatever that account number is up there. Click that and say plus trading view. Add that. All of a sudden, bingo, it was working. Nothing to what they were saying. Good to know my short idea was correct. That consolidation scared me out of it, of the trade though. Which one were you looking at there, David? This short idea, the consolidation scared me out of the trade though. 15-minute. Okay, let's go to the 15-minute here and see what we got. This one here. And it scared you out of the trade. Yeah, it's a whipsaw, right? You really get to find out whether or not you believe in your reversals when you put live money on it. Then you start to go, do I believe it? You can believe it all you want in a demo account, but you put a live account on there, somehow you start to just discount it, or you don't believe in it anymore because you start staring at that dollar sign over here as soon as you put the trade on. See that right here? Watch this. Body trades above here. Tap it. Now you want to see it start leaving here. Stop loss goes down here. Not that you're actually trading US dollars, it's just for observing. So see how we've come down, tap it, and you want to see it leave now, which means all these guys, you're expecting to see them continue lower. See how we've got, ooh, so we'll see where that one closes right now. Just round that out back into this order block here. You've got a swing set up here, body just closed above it here, right into the mean threshold of that candle. If this holds now, I don't think, I'd like to see that mean threshold hold. If it's in conjunction with our Dixie going higher, then I would like to see this hold on that mean threshold and go lower. If it doesn't, let's see it gapped up. So we're expecting this to go, that euro to go lower now. We got the key right off of there. We're watching it just as it happened. We're calling it higher. So I'd like to see this give up and come back down now. There we go. Right in a key spot. So you want to see this come back into here, find a level of support. It can come all the way down and to fill this fair value gap here. If it closes below this point right here on a close, comes back into this, you want to see it take this guy out as well. But ideally, if it comes down to here, closes below it, trades back up into it, you get short here, here, here. Perfect place to be right there. If it traded above you again, then you're going higher back into that range and that reversal right there. See that reversal? Body trades below it right here. This one comes back up, hits it right there. See it? And then you got the continuation. We have a reversal. Does the body trade above it? Yep, you could say it does. And you want to get long. Give yourself some wiggle room. It comes back inside it. If it retraces all the way back in here, your optimum entry to go along would be here. But right now, if the Dixie is going higher, like from where we called it right here, going higher, you got fair value gap here. This needs to break that candle's low, start to get back inside this to go shorter, which would put more upward pressure or downward pressure on upward pressure on this if this went lower. So now if they're not running in tandem with one another, this starts to run higher. It's running contrary to Dixie. See how we want Dixie to go higher? This should go lower, and so should the pound. The pound is sitting there holding its own. The euro is bending the knee. CAD, if the CAD is going, the US dollar is going higher, this should start to go higher, not go lower. Which I don't mind is Canadian dollar. It means we get more bang for the buck if we get we're buying American dollars. But this is contrary to Dixie going higher. Dixie should go higher, not lower, against the Canadian dollar. New Zealand dollar. That's the same kind of rollover you're getting from England. The euro, I should say. So looking for a run back into here. Take that low out. Aussie dollar. Between here and here now. These two. Premium discount inside that range. Looking for a return back into here. You got it there. And that one literally overlaps this one. You see how the confirmation of this one is also the confirmation of this one. So you move to the side and wait unless you had a higher time frame bias, and then you're gambling on a continuation. Oil, what's oil up to? Here's your reversal in oil, taking this low out here. Body breaks above it. You find support at it. You run back up into this range. You pull your fib tool on here. Oh, what a shitty bunch of colors. I'm going to have to get rid of that one. Just this one. So if you entered in right here, you're below 50%. So as soon as you get to 50, move to break even. Wait. You hit 60%, move to break equilibrium. You run to 70, move to 62. It comes back down, takes you out, and you caught this run. Come back, do the same thing, load on again. This is buffering. I call it buffering anyway. You come back in, reload the trade on again, put your stop loss down here, hit 50%, move to break even. Hit 60%, move to 50. From here, you opened up and went straight up to 79% or 75%. Move to 62. It does not come back down and take you out. It continues to push to 79. Move to 70. It comes back, or to 75, and it comes back and tags you out there. So you caught all that and all that up to there twice. And then if it comes back one more time and gives you another load on, we have a swing below the low. Body breaks the high. We come back inside it. You get long. Rinse and repeat. Rinse and repeat. What have we got here? Anybody got any exciting trades? Anything? This is all just high resistance crap right now. I'm done for the day. Yeah, I was just gonna say that myself. I was gonna get done for the day. Call this morning. Good call this morning, Darren. I'm now going to have lunch with my friend and start the martinis. Oh, good for you. Have one for me. Prom for the youngest today. Nice. Excellent. Big prom date tonight. Reading price action is awesome. Chandra, hello. How are you? How's your day going? I'm seeing crude oil higher from here. Chandra is saying higher. Yes, I agree with you. We're finding support off of these levels, off the order blocks. Yep, looking higher. Looking for the next objective up here. I agree with you, Chandra. I do agree with you. Where does it fail for you, though? That's a question you ask yourself now. Where does it fail? If that's your objective, where does it fail for you when along here and this little trend line phantom that's starting here? All the trend line people are troughing this sucker out right now. They're going, it's in a trough. They're just loving this, right? But where does it break for you? Where does it fail? And if it doesn't fail there, if it just comes down, taps you and hits your failure point and then goes back up again, why is that not the failure point? What is it you're missing? That would be my question to you, Chandra. Where, at what point does it fail? Or anyone. I could pose that question to anyone. Look at your oil chart and tell me where you think your fail safe would be. Where's your point where if you're long on this right now, that if you trailed your stop loss right up to a specific point, that if it broke that point, you know it's going to come back down again. Or you've got a strong likelihood that it's going to come down again. Tell me in the comment section. 8 likes. That's it. Hasn't been robust enough for you guys, I suppose. Oh, 28 likes. OPEX is trouble. When it breaks the current swing low. This one? This little swing low? Or this swing low? Which one are you talking about? Which time frame are you talking about? Which time frame are you talking? Oh, an absolute dog-ass morning so far. Yes, it is not. If you didn't catch the early call this morning off that high, then then you're getting mushed. And there is some support here. Boy, do you ever get squeezed there. A little panic attack coming down in here. Then it reversed, came back up. Now we're back into it again. the afternoon. I think when we get that afternoon high, looking for that TGIF Friday. If we get a TGIF Friday, we might have to make some money in the afternoon. But I want some ranges to start cleaning up a little bit. I don't want to see all this chop going on here. Bitcoin, holy doodle. Mm-hmm. Let me have a look at my Bitcoin over here. E5 totally gave us a different level on NASDAQ. NASDAQ gave us that 15 or that hourly retracement. See, back into this candle right here, it gave us our hourly retracement, which is what we were calling for this morning. We hit it perfectly, got the continuation on the downside in that little reversal that we're looking for right at that time. But the MT5 took us right up into onto the body. So that hour, sorry, put that back here again. This here, where we hit it perfectly off the bottom of the wick, it actually, an MT5 came right back to the body. That's such a huge difference in terms of wick. That's why I hate MT5. Hate it. So much more malarkey going on in that damn chart. This trading view is so much nicer. Anyway, you got the idea. Let me go back to this. It's like walking along a prickly fence, isn't it? Consolidation. Body takes out the consolidation. You come back to it. And then continue down. That's a CAM model 1 entry right there. Guess nobody's playing on the old tell me where you think it's going to turn game. Yeah, I was talking about you yesterday, Chandra. We're saying, oh, Chandra's probably going, I told you so. In our little Telegram chat yesterday, I was like, I can hear Chandra just yelling, yes, I knew it was coming down. I told you it was. I'm seeing a rejection at the swing low there on the oil. Ah, yes. Good eyeballs. Good eyeballs, Chandra. Yep, yep, yep. I think if we take that out on a close with this, further downside, I don't think they're going to leave this untouched, though. This will get finished off up here. Check the 6-minute 9 o'clock breaker fair value. Holy smokes, you guys are into 6 minutes? 6 minutes. Look at that little fair value gap right there. You're coming right into that imbalance right now. Trading rentable. Yeah, I like it. That'd be a good place for that to come back up into. Hit there. There's also that little imbalance just above you here too. So if we keep pushing up one more time, look for this one here. It can wick up into that, which would be that level on the 1 minute you're looking for, is it? This is the 1 hour. Right there. $79.28. $79.28 will put you right in here. Fill that up. Hit the bottom of that order block, which is your breaker that takes out that low. So if we get some reaction off of the breaker, 725, 727, and 728. Look for those areas for a reversal on the 1 minute. There's the regular trading hour gap. Equal lows right at 50% of that. Interesting. Interesting. This could be the reversal that you're looking for, Mr. Trading Rentable. Sell side liquidity. Yes, indeed. See how you got a body trade below it now? And here. Trade back up into it. We hit right on the edge of that fair value gap there. Right on the smidge. Like right there. Nailed it. Let me just put that box there. I don't think they're going to leave it untouched, but right now I have to support your idea of the sell side. Right there. We're consolidating, so I want to see a significant take. But we've got sell side. You come back up inside. No body's broken above it yet. You're shorting. You still have a short idea from here. You have taken out these little equal highs with that little wick up into onto the fair value gap. I wouldn't be super excited about a short right here. Not a very clean one, but yes, you are bearish right now inside this off of this inversion here, you're still bearish. You want to see it really slam down, get through here. And ideally this big significant one here, I'd like to see that get cleaned out. Otherwise you're going to go from premium to discount inside this range here. You got this one and this one. The first area you're looking at is right here. So watch from here to here. Really, to keep this more bullish or bearish, I'd like to see that break this on the downside right there. For me, this fails. Yeah, you could say that little spot there fails if you want to really tight on it, but you're in a consolidation. So looking at the smaller range that you're in, this would be a discount right back into here. So if you pull your fib tool from that high to there, there's 50%. So you're still in the premium range right now. So to count on that as being the instrument that proves that you're going lower. Right now, I agree with you. You're going short inside this range. So watch your 50%. If you're actually shorting that inside that range, coming into lunch hour here, I'd be paying myself inside this small little range here. As soon as you hit 50%, break even, pay yourself half. Because lunch hour may come back up, clean these old highs out, and even run for this stuff up here. Trend line phantom, if that breaks, we're coming back for at least 50% of it. So back into this range here or this guy down here. See how it literally popped down below it right there? Ting, 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 right off of the bottom of it. With precision, just bang, 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 bang. It's banging off the bottom of that right now. So there's your confirmation that you're going short. Now you want to be able to continue coming short. And where are you coming short to? Well, your first 50%'s there. So if that was your entrance, you're getting short, pay yourself there, small. It's like it's not even worth it. It's like 3 handles, 4 handles. But if you're short overall long and you want to go down here again, and you've keyed off that level, good for you. You got a lot of confidence, man. That's all I can say. You got a lot of confidence. Check the 6-minute forever. I only trade the NASDAQ. Go Lows London. I'm all for it. All with you there. Trading. I'm going to call you TR. I agree with you, TR. Going down. All you've got confirmation that you're still heading down inside the range. So if you're short, stop loss is there, 50%. I don't know what you do with your back end, how you manage the back end, but we'll see how we get, what kind of reaction you get off of this. So you dip into this one here. We're getting a wick in there. You want to start seeing it really dig through this area right here on a close. For me, you need to close below that. But you're definitely right inside that range. So if these suddenly whip back against you and it runs all the way back up again and cleans out these highs, and you caught this as a reversal, look at the range you're in, look at the discount array that you're in, below 50%. Are you paying yourself in this? Do you want to really be in this kind of mess, right? And if you do, then that's fine. And you want to catch $5, $10 at a time, pay for your trade and a cup of coffee, and that's your kind of trading style, then you'll appreciate the 50%. Pay yourself, take half off, move to break even, so it becomes a zero stress trade. So at least if you get half, if it continues on, at least half your trade will continue panning out once you break that low. I haven't had coffee yet. You can tell. No coffee, no breakfast. 781. 19 more people to go, and we break the big 800. And now you're part of the 800. When I was part of the 800 back in 2016, you're part of the 800 2024. Because in a couple of years, you'll look back and say, when we've got thousands of people, and you say, yeah, I was part of the original 800, just like I was part of the original 800. And by then, we'd already had one of our first reunions. We're going to have a reunion. I feel it. When everybody's starting to click on, they starting to get their setups, and we start nailing regular setups and regular trades. And we all have a big, my dream is for us to all kind of meet up in some big resort somewhere in the world every year. We have a big trading meetup. Bring your family. Enjoy a vacation in some nice place, and then spend a night talking about some trades, some of the experiences that you have, the cultures that you come from. Have a fellowship. I think it'd be awesome. It'd be great. That's the dream, anyway. We'll get us there. I'll get us there. This is a slow meandering bus. Consequent encroachment right here. See that? Bodies are sitting right on consequent encroachment. If I draw this out, you'll see it. It'll be the dotted line. Oops, wrong one. Oh no, that's the right one. It's this one here is the consequent encroachment off. This one here, it's just tapped the consequent encroachment and then popped off. Now you're back on top of it again. So you're between this one here and this one here right now. Oh, I keep yawning. Sorry about that. I keep yawning. Very tired. Yeah, it's finding support off of that again. It's like, here's the reverse. Find some support off of it right here. Here's another one. Find a support off of it here. You get to come back to it again here. And now you're looking at this small little range that you're inside here. So right now you're bullish inside this range. If you get below this again, then now you're really bearish. If we get below here, now I start to go, okay, now I'm a little more excited about a bearish run than I am about doing nothing. So I think that's a bunch of liquidity they're not going to leave along with that stop loss or that fair value gap above here. And I want to watch for here. All right, I think that's going to be it for me for today. This afternoon, I might have another little go at this. We'll see what the afternoon brings. I'm going to go have lunch, and then I'll probably pop back in again after lunch. So about 11 o'clock my time will be 1 o'clock. So in an hour, I'll pop back on, and I might do an afternoon session. We'll see what the market's doing. I'll come in and do an afternoon session and maybe a close for the day. We'll see. I wouldn't mind seeing if we have a TGIF Friday. But yeah, anyway, I'll see you guys this afternoon in about an hour. So I'm going to go get something to eat. And if the markets are so good, I'll pop in. If not, then I'll see you guys on Monday. Or the Telegram. I might be doing a lot of Bitcoin trading this weekend. So I will see you guys in the Telegram channel this weekend or tonight. That's where you usually find me, is on Telegram there, having a chat with people after hours. So I will see you guys then. Thanks very much for tuning in. Thank you for all you people who are still coming and subscribing. I love it. Thank you very much. And I will see you guys on Monday. Keep your powder dry, and I'll see you guys then. Take care.